All right, everybody. Good morning. Welcome back to another live stream. Hope you're doing well and happy Friday. I was doing something pretty cool yesterday on the EdgeFinder, just playing around with something in terms of, user friendliness. I've been working on this concept of adding in more tutorials throughout EdgeFinder, which I think is a very, very key thing to EdgeFinder. At the end of the day, EdgeFinder is not just meant to be a data screening tool. It's also meant to be educational. And so, for example, I've just added these two little icons. I am going to be rolling them out across EdgeFinder over time to make it a better tool. What I mean by that is, this icon, the little eye icon, will tell you what it is that you're looking at. So in this case, we're looking at the CPI, the Consumer Price Index. So this will give you a little bit of an explanation as to what the graph you're looking at actually is. And then this little question mark icon, this is going to be EdgeFinder scoring. So sometimes people want to better know and better understand how EdgeFinder scores various indications, various economic data, etc. So my goal would be that if you're somebody who's looking to learn fundamentals, that the EdgeFinder doubles as a tool for you to scan and monitor economic data easier than ever, but also for you to actually learn how to use fundamental analysis through the use of the EdgeFinder. That is a big goal of mine, is to continuously make EdgeFinder a more intuitive product, a more useful product every single day, so that the average trader who's kind of just getting into fundamentals can learn a ton of stuff just by spending time within EdgeFinder. Anyways, that's a little bit of a behind the scenes project that I'm working on personally right now, is creating tutorials for the different pages within EdgeFinder. Also, for a little bit of a product update here, for those of you guys who are EdgeFinder users, the Top Setups macro scoring page, we have now implemented ADP, JOLTS job openings, and unemployment claims into this piece as well. I know if you watch every day, I added that to the Top Setups overall, but I changed it from Top Setups Eco to Top Setups macro only, just a slight naming change, just because macro, macro kind of encompasses economic growth, inflation, and labor statistics. So slight change to the name. And of course, as I mentioned, we will also implement in some educational resources across these different tabs with time. We also added a search bar. So if you want to just search up like USD, for example, you can see just the USD pairs. So just adding more and more features. Again, the overall goal in terms of how we do things behind the scenes on the EdgeFinder is we never want to stop improving the tool. Over time, we want you to open it up and be pleasantly surprised by new features, new additions, improvements, etc. So with that said, let's jump into some market action. The big news yesterday was the Bank of Japan was perceived as mostly accommodative to the financial markets. There was a lot of worry going into yesterday's price action or yesterday's Bank of Japan meeting that perhaps they would signal a slew of rate hikes in 2026, or that probabilities for rate hikes in 2026 would accelerate. And while that is not an impossibility, it seems like the market liked what it heard from the governor, from the Bank of Japan, um, people, because basically you could see it in Bitcoin. Bitcoin is telling the story by itself. Bitcoin is probably the most, or crypto in general, probably the most negatively impacted by the carry trade. The most obvious sensitive carry trade indication is Bitcoin. And so Bitcoin's up following the meeting. They definitely liked the idea of the Bank of Japan kind of remaining accommodative. And if you don't know what I'm talking about, basically, to keep it simple, the Bank of Japan for years, since the blow up of the Japanese economy in the 90s, um, the Bank of Japan has kept interest rates very low to be accommodative towards growth, towards investment, etc. Well, here's the thing. The Bank of Japan is also now dealing with an inflationary problem, and the yen, in their eyes, is too weak. They don't like the yen being too weak. Why? Because it makes buying exported or imported goods for them very expensive. They don't like that circumstance. So the Bank of Japan wants to hike rates, right? They want to raise interest rates to strengthen the Japanese yen and to combat their inflation problem that they now have. Okay, we can see some of this data. I think it's easier for us to, instead of explaining this in thin air, let's actually look at some of what I'm saying. So if we look at the Japanese economic heat map here, they're sitting on inflation that they don't like, right? 2.9%. I know that's not necessarily catastrophic inflation if you were, looking at the U.S., et cetera. But for Japan, they don't like high inflation. Interestingly, prices in Japan have mostly stayed the same for many years. So prices rising, especially in a population that is elderly, a population that is, an economic circumstance in which they have very high national debt. Inflation is problematic. So basically, with low growth and high inflation, they have a problem. They don't like the idea of the Japanese yen getting weaker. It makes their issue worse in terms of importing things that they need. So they want to hike rates. What people were worried about in terms of the Bank of Japan yesterday is the Bank of Japan going to signal a more urgent need to hike interest rates quickly? And you can see people still expect them to be hiking interest rates. What you can see here is the Bank of Japan on the 10-year government bond yield spiking to its highest level in many years. There is a real risk here to the Bank of Japan hiking interest rates, because what people do is they borrow. And when I say people, I'm talking about hedge funds, for example. Hedge funds, they borrow from the Bank of Japan because of the low interest rates offered there. So they borrow at low interest and they go offer it out. They go lend that money out or buy stocks with it, et cetera, to where they believe they can get better yield. And that trade has been going on for years. And that trade with spiking interest rates in Japan suddenly challenges the efficacy that strategy, right? So I know I'm explaining a lot of stuff, high level macro things here. What does it actually mean for markets? What does it mean for you? Well, if the Bank of Japan goes on a rate hiking cycle, it could cause some issues with the carry trade, which is a huge amount of money flooding into risk assets like stocks and cryptos. So if it reverses, it could be a huge flow exiting stocks and cryptos. So it could cause some softness. Could it by itself cause a global meltdown financial crisis? Not by itself, but if you combine that with, rate hikes in the U.S., for example, if it was Bank of Japan and and the U.S. Bank hiking interest rates, then you'd have serious concerns. But I don't think this is necessarily something to go sell the farm about. But I do think it's something to watch. It is a negative thing for the Bank of Japan to hike interest rates quickly, because again, it dries up some of the ability for money to flow into things like stocks and cryptos. I think it's part of the reason why people are a little bit worried about the stock market right now. I don't think it's, again, enough reason to just go short the whole thing and say it's going to go to zero. But I think it issues caution. So, morning, Nick. Can we go over retail sentiment on SPX? Absolutely. Let's take a look, see what the put call ratio is looking like. I'm going over to my crowd sentiment tools here. So, first of all, price action, just real quick on the S&P 500 has been pretty choppy. You've had a bit of a topping point here. I wouldn't call this a double top personally, unless you were to see a failure at support here. I think this is just a range, right? I think we're just trading in a range on the higher time frames for the first time in a while. I mean, we haven't had a range on the S&P 500 in a minute, like a longer term range. We've just had pretty much trends for, honestly, for a very long time. This is the last time you had a pretty rangy market. It was last year this time. So we've gone pretty much the full year trendy, right? Where higher lows, higher highs kind of dominated. We went down, trended up, trended up, trended up, trended up, right? And now we have an environment where we're range bound. Now, a range bound market, sometimes people will say, oh, that happens at the end of a trend, or some people will say, oh, that happens before the continuation of a trend. I would say it could go either ways. So right now, the S&P 500, in my view, is kind of in no man's land. You have resistance overhead, you have support beneath. I think that if you have a big drop, my personal bias would be buyers probably step in here. And I think that sellers have, also showed that they are kind of strong up in these ranges. We are seeing sellers come in and actually smack price back down. So I think you're in a range, which means I default to the macro outlook and I default to waiting for price action to start trending again before I try and make some sort of big, huge call on it. Taking a look at market sentiment, check this out. Very interesting. Put call ratio went in one day pretty extreme. We went from people being very pessimistic on this market to yesterday, people starting to get a little bit more optimistic, right? So for new viewers, what am I looking at? I'm looking at the put call ratio. And by the way, if you have EdgeFinder, hover over on this, you can actually read what the put call ratio is all about. Kind of cool. Anyways, what this is showing you is that when put volume, which is bearish bets in the options market, when that volume spikes, that typically represents people are pessimistic, concerned, scared, fearful, bearish on the market. And when this thing spikes to the downside, that shows there's a huge amount of calls being bought, right? Or bullish volume. So right now we have a lot of, recently we had a lot of bearish volume. And interestingly, that's right where the market kind of bounced. You had this little bounce here after the bearish volume got high. And now we're sort of almost back at the extremes. Let's also just take a look at NASDAQ as well. So NASDAQ, check this out. Bearish volume big time here on the NASDAQ. We take that as a bit more of a contrarian reading, meaning that is more of a bullish signal within EdgeFinder, because historically speaking, when the crowd gets really scared and sells all their positions, that's where the market will usually give you some kind of a bounce, and vice versa. When everybody gets a little too euphoric, you can also see the market kind of give back some gains. Yesterday was an interesting intraday candle for the S&P 500. We had a big spike up on the CPI print, which was a good print, only to fade about half of the gains on the day. We'll see where we end up today. I think on the S&P 500 and NASDAQ, you're at a pretty critical spot on the daily time frame. This level, we've talked about several times in the channel, has been a pretty critical spot. It was the NVIDIA day high. And then when we broke through that level, we found support there, rallied further, came back down to this area. Now that we failed there, I'm wondering, as we retest it, what the reaction here is. If we can get back above, right, then perhaps we're just, and this is emblematic of a range bound market. What I mean by that is that we keep coming back to this level, like we're magnetized to this area. That is very, very evident of a ranging market. And ranging markets can give people a lot of trouble, because people who are super bullish or super bearish can both lose money in a ranging market. So my thought process is we want to see some sort of solid breakout, higher lows, higher highs. We want to see something form here, more of a trending environment. Or if we're going to go bearish, we want to see price come back down to these lows and actually fail at these lows, like give us a break through those lows or a break through these highs. That would give us more of a, okay, trend up or down, may actually be back in order. If I take a look at the top setups reading, I have to say a little bit of a softer reading on some of the indices recently. S&P 500 has dropped to a +5 score, which is still a bullish rating, but barely. The -2 score here in trend is also something to note. We have seen price flip in the downwards direction here recently, so we'll see if that has any follow through. And we also know some jobs data has come in pretty not great here recently. Inflation statistics were a big win for the S&P 500 this week. CPI coming in much better than expected. That's going to help your score here in terms of inflation. And it makes good sense. That is more accommodating to the Fed cutting interest rates. Fed cutting interest rates essentially is the money printer turning back on. And one thing stocks love is free money being thrown around. They love it. They hate the opposite. Stocks absolutely hate. Like if you look at 2022, right, the market tanked 38% for the NASDAQ or something like that. Stocks do not like when the Fed turns off the money printer and the free money party stops. People or the stock markets love when free money is being thrown around, right? Remember that. It's like the most important thing. Understanding what the Fed is doing, whether you disagree, disband the Fed, whatever. The point is the stock market loves when the Fed is printing money and they hate it when they're not. It's the system, right? You got to trade the world you're in, and everyone bows down to the Fed. So with that said, dollar index sitting here at a pretty interesting level too. This is another one to watch. Bottoming at least in the short run here, despite the cooler than expected inflation reading. I would actually say for me, if you get a rebound in the dollar index, the path of least resistance for me for dollar is still to the downside. If we take a look on, let's go just dollar pairs. Let's see if there's anything here. Major currency pairs getting a neutral reading across the board here. So probably not a bunch of trades there for me. But if I do go to macro only just for a second, just to see where the dollar's at, and we go category major currency pairs, you can see that there's a little bit stronger reading for something like NZD USD. I did have a trade on NZD USD that stopped me out. I'm no longer in that trade. Took a small loss on that one this morning. Yeah, so dollars, we're going to keep watching it, but currently not a strong enough reading here for me on the dollar index. Gold continues to look really bullish. We're sitting just at all-time highs or just close to it. I've got my stop loss trailed on this one. I would love to see this thing clear through those highs. If we were to see something like that, something like this, big break through those highs, would be wonderful. It would give me an opportunity to take this stop loss that I have and trail it further into profit. Currently, I'm just going to sit with the trade. I wouldn't mind holding. If it does want to come down for a few days, perfectly fine with me, as long as we don't break this this supportive level that we have around 4,200. I've got to stop at 41.64 in terms of spot price. So if price breaks through this low, then I'm out of the trade. I'm long GLD, the ETF. Here it is, GLD. I am long. I remain bullish on gold. I made a post on my Instagram yesterday that did okay, talking about how I still think gold is bullish even at all-time highs. Now, obviously, nothing here is financial advice. Do your own research, trade your own strategy. I'm just sharing my thoughts and opinions on this stuff. But here's the thing, right? When it comes to gold, we had inflation come down significantly, not just in the US, but also in the UK. Let me show you this. So inflation coming down is bullish for gold because it's likely going to lead to central banks continuing to cut interest rates. And it's not just about the US, it's about other central banks. We can watch this stuff. Look at the UK. By the way, I cleaned up this CPI chart. I think it looks a little bit better. And also, if you have EdgeFinder, hover over your little question mark here. You can read about what the EdgeFinder, how it's scoring CPI. You can hover over this and read about what the CPI is. I mentioned this at the top of the stream. If you're just tuning in, we talked a little bit about Bank of Japan. I saw somebody had a question about that. If you want to scroll back in the video, I talked all about Bank of Japan. But in terms of your EdgeFinder copy, if you have one, hover over some of these icons. I'm adding in some tutorial stuff throughout EdgeFinder. My goal in 2026, as always, is to improve the EdgeFinder, but specifically, I want to make the EdgeFinder more user-friendly, make it more educational. If you open up the EdgeFinder, I want you to learn something every day. That's the goal, right? Not just necessarily like I want you to be able to use it to help find better trades and scan markets more effectively, but I also want you to know what you're looking at. I want you to know how this stuff impacts the charts that you care about. If you trade gold, how does EdgeFinder watching CPI, how does that help you, right? Because it can tremendously. Understanding what you're looking at on a macro basis changes the game forever. Once you understand macro, if you take the time to understand fundamental analysis, macro, what central banks are doing, once you know it, you can never look at markets the same. You can never, ever, ever look at markets the way you did when you first started trading. Candlestick patterns, moving average, come on, that's child's play. Understanding what central banks are going to do next, that is the real game, right? Once you see it, and some of you guys, let me know in the chat, has anybody had this epiphany? If you're in the audience right now, if you let us know, give me a 1 in the chat if you know what I'm talking about. If you know what I'm talking about, give me a 1 in the chat. If you have had that moment, that epiphany where you say, holy, you know what? I see it. I now understand. Markets are not easy. They are not a game. They are not a casino. Well, I mean, they are a casino, but it's a different type of casino than you think. It's not a fun lights and show and all that day trading excitement, right? Nothing wrong with day trading, but I mean, I find it to be really difficult. But my point is, once you see it, holy mess. It's like you cannot look at it a different way. You're like, this market's not moving on head and shoulders patterns. This market is not moving, just because some guy saw a moving average crossover. This market's moving because gas prices are going up, or people are getting let go, or the Bank of Japan just did something and it moved Bitcoin by 3%, right? All the people who play Bitcoin like a video game, they may not even recognize that what's moving Bitcoin is still the macro. Everything is macro. It is king. It is the most important thing, in my opinion. Anyways, there's my I let the cat out of the bag a little bit in terms of showcasing my my macro supremacy opinions. Long story short, markets don't move just based on candlestick patterns. They move based on the real world, what's happening. It's the real force that we all experience as human beings in a global economic system. That's the stuff moving the markets. FA equals king. True. Anyways, so inflation coming down in the UK, inflation coming down in the US. What does this mean for gold? Well, again, if you have EdgeFinder, hover over this and what you'll see here. Okay, so it's going to be your fourth paragraph down. I'm just going to read this little excerpt as a example of how this new explanation stuff is working. Conversely, if CPI year over year comes in lower than expected, the EdgeFinder views this as bearish for the underlying currency and bullish for stocks and gold. For example, a cooler than anticipated CPI reading signals diminishing inflationary pressures, lowering the probability of further rate hikes and opening the door to potential monetary policy easing. Boom. I was like reading a verse out of the Bible or something. I don't know. I feel like a preacher. You know what I'm saying? Like basically, that's why it matters. Inflation coming down means the Fed, the Bank of England, the ECB, the Bank of Japan, all these places, if they have cooling inflation, they can cut interest rates, aka the money printer turns on, aka fiat currency loses value. Gold and silver move up, right? That's what I'm talking about. If you want to understand macro, so there's no shortcut. I've learned this stuff over just like the last 10 years of doing this, studying it, reading about it, watching, listening. The best way to learn is to listen and spend 30 minutes a day. If you want to learn macro, here's a couple things for you. You ready? A lot of people in the chat may be new to macro and they want to learn more. They want to better understand it so that they can actually understand why markets are moving. Here's a couple things, some free, some paid. Free, subscribe to this YouTube channel. Come back every day. I'm constantly learning more and sharing everything that I know on YouTube, 100% free, no paywall. So subscribe if you haven't already. Hit the thumbs up button, helps the channel, all that good stuff. I'll share what I know, which is not everything, but I'm learning and sharing what I know. I've been able to produce, consistent profitability in my trading, heavily thanks to understanding macro trends and implementing them into my swing trading approach. So you can learn by listening to what I have to share, as well as other people. I highly recommend you listen to all sorts of different creators that focus on macro. It's a great way to learn for free. Step 2, you want another free way? A free way to learn fundamentals is by joining our Telegram channel. We'll drop the link, or you can scan the QR code below my camera. 100% join our Telegram channel for free. Thanks to our writer in the chat. He's here with us today, Alan Perez. He's sharing regular updates to you guys. It's completely free updates on what's happening macro, right? He does an excellent job putting together daily snapshots for you to stay up to date. You don't have to pay us a dime. So there's your second free resource. And the third resource, easily, no questions asked, get yourself a copy of the EdgeFinder. It's worth every penny if you want to understand macro. If you see yourself as wanting to improve in macro trading, get yourself a tool that can actually help you to track it all, right? That's what EdgeFinder does. So there's your 3 options. Take advantage of the free ones 100%. And if you stick around, here's another warning. If you keep watching, if you keep joining the Telegram channel, if you hang out with us, you're going to want to buy the EdgeFinder because it's worth it. It's straight up. It's just straight value. The tool adds so much confidence to your trading because you can actually monitor what's happening on the macro front. Anyways, let's see. We've got the U.S. stock market open up in 4 minutes. S&P 500, again, has something to prove at the 6,800 level. I think the bears here are trying to get this thing to move lower. Is there a good book? Nah. In my opinion, I'm not a big book person in general, but macro is a moving target. It's something you have to learn about in today's current era all the time because there's something new happening, right? Tariffs were a big thing in 2025. The last time they were big was like the 1800s. So, understanding macro is sort of an ongoing current learning curve. So join us here, join the Telegram and buy the EdgeFinder. I know you're like, wait, so that was just one big gimmick to get you to buy a product? 100% buy it. It's worth every penny. If you want to understand macro, it's worth every penny. I know it because I've spent quite a bit of money building it, and it's worth every penny that I've spent building it too. Even if I never sold a copy to another person, it would have already paid itself off. Between all the trading accounts that I've used it in, yep, it's game changer. Macro is king. Okay, so S&P 500 sitting here at resistance. I'm curious to see how that plays out today. Dollar index sitting at support. Curious to see if that either goes lower. I think, again, I lean more to the downside on dollar index. I think you have momentum here to the downside. We've been putting in these lower highs. Is that a lower high? That's the question for today. Or are we going to take that out, right? Infomercial, 100%. Buy it. It's worth it. If you break through this, right? If dollar index gets head and shoulders above there, then I think you have a little bit of a, maybe a retest of this 99.4 level. So from the day trading perspective, you're watching the dollar, right? If you're watching the dollar, if we get above this area here, the high of day, you could have a little bit of a squeeze into the weekend, into Monday. But I do see some limited upside on the dollar for now. I wouldn't say I'm outright just like blow it out of the water bearish on the dollar. I think that the dollar index has downside to come because I do think the jobs market is really cooling and inflation was cool. Like I see room for the dollar index to fall, but I don't necessarily see plummet for the dollar. The difference between plummet and a grind lower, plummet would be like, just straight up, we're going into a massive recession. It's fallen out of the skies. And I don't necessarily see that for the US. I just think that you have the Fed's going to cut rates further. They have a new chairman that's going to come in and probably cut rates further. So, I mean, more so than I am dollar bearish, I'm gold bullish. I think that's a good way of defining it. I think global central banks are going to cut interest rates. So when everyone's sort of cutting rates, when everyone's cutting interest rates, it takes something out of, oh, the US is going to cut rates. Well, yes, if the US is going to cut rates, but so is everyone else, it means less, right? If the US was cutting interest rates and everyone else was going to hold steady, then the dollar would be really, really weak. But I think you have a scenario where, remember, currencies are all about relativity. It's all about what the other central banks are doing. So yeah. Is the discount still on? Yes, we extended it to the end of the year. We extended it as our holiday discount. We had some people during the Black Friday, Cyber Monday period where they were like, I can't get to it until like mid or late December. And we're like, all right, we'll just leave it open. Because, honestly, volume in terms of people watching videos, et cetera, has really slowed down just because of the season. It's every year. But if you want access to EdgeFinder, we'll leave it open for you. Just send us a direct message on our website. Click this link that's just been dropped in the chat by our producer. If you need a payment plan, if you need to split it up into a couple of payments to make it low cost for you, we can do that. It's currently 45% off. It's the biggest discount that we do each year. So don't miss it. Scan the QR code. Well, actually, we'll change the QR code in a second, but the link in the chat there will get you access to speak to a real person on my team who can get you set up with a copy while the sale lasts till the end of the year. How can you do top-down analysis with this system? So what I do, I pretty much, like, I'll show you. I got to go here because we're going to throw the show over to Marco in just a second. But let me just show you, for example, gold is an easy example. So gold's getting a bullish reading. It means that technicals generally getting bullish scores. You can see all the different categories as well as the individual columns. So trend, seasonality, institutional activity through the commitment of traders report, crowd sentiment, economic growth statistics like GDP, PMIs, retail sales, inflation statistics, the consumer price index, the producer price index, PCE, personal consumption expenditure. It's tracking the jobs market, the consumer, inflation, economic growth, sentiment, technical data to build a bias. And so when it has this bias, what do I do with it? Do I just go buy gold just because it says bullish? No, I use it in combination with my own trading. So for example, I like gold bullish. I'm already long gold as of a few weeks ago, and I'm still in the trade. I've trailed my stop loss into profit, but let's just say I wasn't in a trade. Let's just say I had nothing on right now. I like this area quite a bit. If we were to get some kind of a pullback into this range here, this yellow box, as long as EdgeFinder has a bullish rating there, and we're pulling back into a supportive level that matches my criteria for an entry on a technical basis, I'd probably take a small risk there looking for upside on gold personally. That's how I use EdgeFinder. That's how I use, the readings that it's giving me. So it's not a holy grail. Nothing is easy, guaranteed profits in markets, but it's a confluence tool. It helps add macro fundamentals and market sentiment and institutional activity to your trading analysis without having to do it manually by hand every single day. It's an automation tool. It screens data for you. It's a confluence tool. It helps to build better insights on the trades that you may be looking to place. So with that said, if you want access to EdgeFinder, again, the link is in the chat, or you can scan the QR code right below my camera if you want to speak to a member of our team and take advantage of our holiday discount. Up next, we have Marco from Marco's Trading Journey. He's going to go over some of his setups and his things that he is watching in this market right now. Stay tuned. We'll be right back with him just after this quick break. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. Hope everyone is doing well. Hope you're having a good Friday. So let's just do this. We got the news. If you followed me yesterday, you would know I was waiting for the Bank of Japan. I was waiting for the interest rate decision. It came out. You can see it right here. They hiked the rate to 0.75, but they turned out to be, the whole event looks like it turned out to be more dovish than expected. So after the event, UJ just flew higher, meaning the yen lost value. So the yen pretty much lost quite a lot of value. The dollar is up on the day, which is going to mean that UJ is having a big bullish candle. I didn't take a position before the event. In my opinion, it was too uncertain. So the BOJ is a very tricky thing to read. And my bet was that they will not even hike. Well, they did hike, but they had some dovish forward guidance, meaning they don't have a clear plan on how to deal with inflation. So if you go to the inflation data in the EdgeFinder CPI and you go to Japan, you will notice they have elevated inflation. So inflation is troubling in Japan. They don't have a clear roadmap, clear path to lower inflation back to 2%. So that's what has the people concerned. You have the new Prime Minister, Takaishi. She is pretty dovish. She doesn't really have a plan for inflation. And the market is, of course, interpreting that as being dovish / negative for the yen. UJ goes up. So it ended up being flat, not taking a position. It would have been a winner, but not for the reasons that I initially anticipated. My opinion was that they were going to skip the hike this time and then actually hike the rate in January. Well, they hiked yesterday, but they had, as I mentioned, dovish forward guidance. So the market at least interpreted it as dovish forward guidance. So UJ, in my opinion, right now is the most interesting currency pair because there's definitely some movement. We are back in the territory where there could be a possible intervention. So when we crossed 158, or when we touched 158, we started to talk about a potential intervention level. Last time they did it, or like the most significant time, was right here around 160 to 162. I think that is again going to be a crucial level. So I think we still have a bit of room to appreciate, to go higher. But then if you're holding a position, if you're in a buy setup on UJ, I would be closing my positions at around 160 because that is the area where they could do an intervention and your position, your long position, could get crushed. I'm not actively looking to buy it, so I'm not actively looking to get in on a buy setup here. I'm not so bullish on the dollar, if I'm being honest. I'm bearish on the dollar. So I still am looking at, let's say, NZD/USD, and UJ I can now also, let's say, delete from the watch list. NZD/USD is still something I'm looking at, considering I was waiting for the CPI. CPI came in at 2.7, while the forecast was 3.1, so a lot cooler than expected. But you have to note, the market completely ignored this print. If you look at the price action from Thursday, you would notice that there was very little movement from the CPI print. Why is that the case? Well, it is because big players, whales, hedge fund managers, big currency traders, they know that there was a US government shutdown. They know that the BLS, Bureau Labor of Statistics, did not do a proper job with collecting this data, with collecting the inflation data, so the print could be wrong, this last print. We're waiting for the actual CPI print in January and in February, where we should get a clear picture of what's going on, because by that time, the BLS should get all of their, let's say, resources back together, and they should do a proper survey, proper research on what is the inflation number. Okay, so the CPI was a nothing burger, and you can pretty much discount the number. you can just ignore the number because it's not a reliable number. The market has ignored it mostly. And then I was waiting for the BOJ policy rate because, to be honest, I was expecting, if they hiked rates, I was expecting some possibly even bearishness in the dollar. So, oh yeah, I'm sorry, I got things a bit mixed up. No, actually, let's see. Let me just see something. Let me check something here. So for the dollar, again, the dollar kind of gained value against the yen. And as far as I can tell from the markets, there was no real unwind of the carry trade, right? Because you would think if you go to the EdgeFinder and you go to the FX macro scanners, you go to the carry trade scanner, you type in USD JPY. Whoop. You would think if this number is coming down, which it is, and if this number is going up, which it's going up from 0.5 to 0.75, and the divergence is getting smaller, so the carry trade profit is getting smaller, you would think that people are starting to exit the whole carry trade position, but that hasn't happened yet. So the dollar is still appreciating against the yen. People are still buying the dollar, selling the yen. Looks like the carry trade is still in full play. The last time carry trade unwinded was a big unwind was in July 2024. So you can see the amount and the sheer power of such a carry trade unwind, where people go from buying the dollar, selling the yen, to selling the dollar, buying the yen. So I thought that was going to happen with a hike. It didn't happen at all because at the end of the day, it looks like the forward guidance was so dovish in a way that the market just completely ignored this rate hike. And I think if you go to the Financial Juice website and you go to Forex, let's see. So if we scroll lower, I usually focus on the data that is in red. So that is highlighted in red. See, BOJ rate decision, real interest rates are expected to remain at significantly low levels. So that's good for the carry trade. BOJ, even after a rate change, real interest rates remain deeply negative. Monetary environment remains accommodative and supports the economy, right? So still kind of a dovish result. I thought that was important to highlight. NZD-USD on the watch list, looking to get in, will possibly get in after the stream. You will, of course, be notified if you're in the A1 Trading Discord. So if you want to join the A1 Trading Discord, you can do so with my discount code Marco. You get trade signals, trade breakdowns, trade analysis, fundamental event breakdowns, and you get a trading chat with other successful traders in the space. And you get access to Nick, Chris Pulver, iWind, me as well, and Alan. So Alan Perez. I highly urge you guys to check it out. This discount code works both for the A1 Trading Discord and it works for the EdgeFinder. So if you want to get the EdgeFinder and get a nice discount, make sure to use the code. Continuing with the regularly scheduled program. Let me check if we have anything super important for the next week. We kind of don't. It's the holidays. It's the end of the year, 19th of December. Christmas is coming. New Year is coming. We only have the CAD GDP and we have the unemployment claims for the USD, not going to be that important. And we have the JPY Bank of Japan Governor Ueda speaking, which I don't believe is going to be that market moving. I mean, most of the important stuff has already happened a couple of hours ago, you can say. I think, is it 8 hours ago or 6 hours ago? Something like that. Now let me check the comment section. So, so you're not gonna trade with us like a short scalp? Hello, AV. Welcome to the stream. Hello, Sluggy. When you get the chance, could you cover NZD/USD? Sure, absolutely. Joshua, welcome to the stream. I'm doing pretty well. Hope you're doing good. GBUSD, sure. If you miss the entry, how can you jump in on UJ? I'm not looking to jump in on UJ. So my game plan was to possibly get in UJ before the event. But I thought about it, did some research. I just didn't have enough confidence to buy UJ before the event. My bet was that there was not going to be a rate hike at all, so that the reaction was going to be super dovish for the yen. The move was correct, so my forecast was correct that UJ shoots up, but I didn't have a trade on. I'm not looking to get in right now. For those of you that maybe are in this trade or will be buying UJ, I would say you have some free room up until 160, because that is the territory where the Bank of Japan could intervene. Okay, so 160, troublesome territory. I would be closing my longs at that area. So NZD/USD, a deeper dive for NZD/USD is basically this. The New Zealand dollar, the RBNZ, Central Bank of New Zealand, they flipped from being dovish to being hawkish. Dovish is bearish for the currency, hawkish is bullish for the currency. So RBNZ plans to hike interest rates in 2026, while the Fed, Central Bank of United States, they plan to cut rates. Let me see what is priced in right now. So by December, we have 2 rate cuts priced in. So essentially, rate cuts are most likely coming. That's a clear divergence. RBNZ is hawkish, Fed is dovish. I think that's a perfect storm for NZD/USD to go up. I'm also short-term or a little bit bearish on the dollar, at least a little bit. I don't think it's going to go to 95, but I think it could go down a bit more. And I do actually think that this area is a good area to buy. We are right at the 20 MA on the daily chart. You can say we sort of reached this support level. Although it's not such a clear support level, you're definitely not getting in at the highs, which is good. That's always a plus. And the EdgeFinder, let me scan the top setups. Let's see, NZD/USD. Okay, we're getting a neutral reading now, but it used to be bullish. That's a bit of a problem, because I usually like to take trades that are in line with the EdgeFinder. So yeah, it was in the bullish territory, but now it went to a neutral territory. Where have we lost the reading? Let's see. So here, if you dive in a bit deeper, you can see that we lost the retail sentiment, and we lost something. We lost the trend reading. So it looks like we lost the trend reading as well. Not the best, but I'm still heavily considering getting in. The only thing now is, of course, EdgeFinder is neutral, and we're approaching the year's end. So as I mentioned, 19th of December, I'm not expecting a lot of volatility. I'm not expecting a lot of movement. This position is negative swaps. So if you go to the carry trade scanner and you type in NZD/USD, you can see that if you're buying, you're going to be paying negative swaps, which means I'm going to pay for 2 weeks of negative swaps, while the market may not do anything. The market may just stay flat. That's a bit of a problem. So that's what's keeping me out. I have some newsletters today that I need to go through. I have some research I need to do. And then I will decide if I want to be in this position or not. I do think it's still high probability. With all of the advantages and disadvantages, I think net it's worth the risk. It's worth taking. So yeah, if you're in the A1 Discord, you're going to get the update if I do take this position. So far, my favorite currency pair, definitely. NZD/USD, my favorite currency pair. Before we go through GBPUSD, I do want to mention the sponsor of today's video, which is going to be DNA Funded. So if you guys are looking to expand your trading capital, if you're looking to get more capital, basically, or get more funding, DNA Funded is a great option. So there's a big broker behind this company. They're being ran by professionals. It's not a kid in a basement. They are very competitive. I would say in terms of reliability, they're up there with 5%ers, E8 Markets, FTMO. But what's best about it, two things. First, you get 25% off with the code A1Live. So A1 Live gets you 25% off any challenge. And then, second thing, they're using TradeLocker. TradeLocker, in my opinion, best software for trade execution by far. You get an automatic risk calculator built into the software, and I didn't have any issues so far. This is my personal account. Two-phase funded, 50K. Currently in minus $3,000 or $2,900. So not doing so well. I have two trades open, buy on the S&P, buy on the euro dollar. Both are running in profit, thankfully. Hopefully they do hit the take profit because I'm approaching the maximum drawdown rule, but it's still okay. And by the way, this challenge is purely traded by ChatGPT trade signals. ChatGPT successfully passed the phase 1, passed the phase 2, and now we are in the funded stage. So I update you on every single stream. If you want to get more news about this, you can watch my YouTube channel because I have a whole series on the topic on my YouTube channel. My YouTube channel is Marcos Trading Journey. Okay. So use the code A1Live, get 25% off any DNA challenge. For GBPUSD, let's take a look. Not my favorite thing in the world. I like the Aussie dollar more if you want to do something with the dollar. Of course, NZD number one, Aussie dollar would be the second one. GBPUSD, I'm not sure about it. It's a pretty mixed currency as far as the pound goes. It's not super strong. We can take a look at the economic heat map for the UK. This is just the short-term data. See, this is fresh data, so we're getting some pretty fresh numbers, mostly bearish, so not looking so good. Then we can look at the real yield heat map, and you can see, well, actually pound is number 2. This is more of a longer term score where we look at the GDP, the unemployment, the interest rate, the CPI, and the real yield. Pound is number 2, which is good. But again, it's below the dollar, long-term stuff. This is very, very long-term. But just because of the short-term and the whole situation in the UK where they are struggling, the numbers that they're producing are not looking so healthy. The price action is not in a huge uptrend, I would say. Not my favorite thing. I don't think the polarity between the pound and the dollar is good enough. Like the polarity on NZD/USD is worth it. Aussie dollar, I think as well, is good. Aussie is significantly fundamentally stronger than the US dollar. So that's my opinion. We can check on the top setups. GBPUSD, neutral, AUD/USD, neutral as well. Okay, so that tells you something. Sluggy says, I got tapped in on NZD/USD. Will add more if it pulls back further. Willing to add on 50% daily fib. The rejections on pound Aussie seems promising. I haven't looked at the pound Aussie in a while. Let's take a look. Pound Aussie had actually pulled back. This was a position I took. It ended up being a loss. Looks like it's not moving anywhere. The Aussie is definitely stronger, in my opinion, than the pound. So the Aussie is definitely stronger. Just looks flat in the short term, in this flat range. Doesn't seem to be moving anywhere particular. So not for me. Melissa says, Marco, you lost complete interest on the euro dollar. Euro dollar, let me see the top setup, EdgeFinder. Fundamentally, the euro is not so strong. I think the ECB has switched from being, let's say, or they are remaining neutral. They're not that hawkish. They did have an event this week. The ECB rate statement press conference, but they're staying neutral. So also the problem is, if you look at, for example, the US stock market, it looks great, super bullish. But you look at the DAX, looks flat, hasn't done anything for most of 2025. Usually, currencies appreciate as there is demand for the stock market. So if there is much more demand in 25 for the S&P, like significantly more demand for the S&P than it is for the DAX, the dollar should in theory become a bit stronger than the euro. Well, it hadn't happened. It didn't happen because it doesn't always happen. Actually, the euro became stronger than the dollar, but then it became flat and stagnant. Then it became flat from, let's say, the 24th of June. And I'm looking at the data. We can look at the where is it? Here. I'm looking at the data, short-term data. Most of it is coming out worse than expected, more bearish than expected. Let me check the AU. AU looks good. Let's check the NZ. NZ is 50-50, but the euro is definitely the worst. So only 16% of the data is coming out better than expected. Let's look at the real yield. Euro is number 3 on the list. That's a pretty long-term look. So I just am not sure. I also looked at the interest rate differentials because the price of the currency, or basically the price of euro dollar usually follows the interest rate differential. Well, if you look at the differential, I'm not sure how to bring it up here on TradingView, but the differential is now above the price. So the price should, in theory, catch up to the differential, but that sort of lead lag indicator has not been working so well in 2025. 2025 has been tough. Seasonality hasn't been working so well. Lead lag indicators haven't been working so well. Interest rate differentials not working that well. So it's tough. It's a tough year for the currency market. It's a pretty easy year for gold and silver, though, because just they're shooting higher with massive momentum. Stock market doing pretty well, but the currency market has been rough. The currency market has been tough. So EU not on the list. Yeah, I would agree with Sluggy. EU is looking flat. It's looking a bit boring. Like on NZD/USD, there's a clear flip. There's a clear pivot from a downtrend into now a possible uptrend, while EU has been doing nothing from let's say the 10th of July. Marco, you are super in this industry. Well, thank you very much for the feedback. Unicorn Entertainment Africa. But how can I master the swing high, swing lows? Thank you, bro. You don't need to master them. It's pretty easy. I mean, I have an indicator, which you can see right here, which shows you the swing highs and swing lows. This chart is pretty flat, but if you go to a more trending chart, which is NZD/USD, it's just the main pivot points, like swing low, swing high, swing low, swing high, swing low, swing high, swing low, swing high. This is, of course, a swing low. This would be a swing high. So it's just like the top of the mountain. This is sort of a mini mountain, right? And then you have the inverse for the lows, like a crater, you can say. Pretty easy to spot. Is it crucial for your trading? Absolutely not. Is it good to know for placing your entry, stop loss, and take profit? Yes. But if you want to focus on one thing, if you're just starting out, focus on building a trading edge. That's your number one concern, because most traders don't have a trading edge. And no, fair value gaps, ICT, SMC, liquidity, gap sweep, order blocks, that's not a trading edge, that's a scam. But if you join the A1 Discord, we talk about legit trading edges all the time. For example, I'm experimenting with a particular edge on the euro against the Swedish krona. So there's a clear seasonality pattern. You can put it in ChatGPT. It's pretty well known. So it's a seasonality pattern where after the 15th of December, the Swedish krona gains a bunch of value, while the euro loses value against the Swedish krona. So there's a very, very strong seasonal pattern. After the 15th of December, every single year, it goes down. So far, it's running a little bit of profit. This is very low risk, just an experimental position. And this was not a signal in the A1 Discord because, again, just an experimental position. I don't have a lot of confidence in it, so I don't want to place it as a signal. But this is the sort of stuff we talk about. Like NZD-USD, the edge right now is the pivot from the central bank RBNZ from being dovish to hawkish. That's a clear trading edge. It's not some voodoo, astrology, technical analysis, order block crap. So build your edge first. That would be my main advice. Let me see if someone is coming after me today. A1 stream schedule. Nope. So I'm going to wrap up the stream in like 1 to 2 more minutes. GBPUSD is neutral. I got tapped into EuroCAD. Euro has 2% rates, 2.1 inflation. Does this make it attractive even though it doesn't have high yields since it's at target inflation? Well, it's not that simple. You have the correct assumption where the euro has 2% rate, and 2.1 is the inflation, and those numbers seem pretty close to each other, but it's not that simple. There's so many things going into the value of the euro that you have to look at multiple things. And again, interest rates are more long-term. I would say what is really important and pretty easy to look at is the economic heat map section in the EdgeFinder. And you can just look at the last 8 data points that came out for the euro. Most of them are coming out worse than expected, which means short-term bearish for the euro. And then you can look at some long-term trends. For example, you can look at the GDP. That is something that is working in this environment. Positive GDP, that's good. Inflation. I think inflation is doing okay. Yeah, it's around 2%. It's not bad. Then you have the unemployment rate. Rising unemployment. So the unemployment is definitely rising, which is not the best scenario. But if you compare this economy to the US, there's no massive edge. Like the euro is not so much stronger than the dollar, especially in the short term with the economic heat map, right? Look at this number, then look at the US. US is doing better in the short term. At least that's how it seems. So I would not base my decisions only on the interest rate and on the inflation number. It's a lot more complicated than that. Euro yen yield is less still. Is it at all-time high? Do you think it will come to normalcy? What is the indicator you use on your chart? So the indicator is called the GT recent high low by Bong Hyun. And that's about it from me. You can catch me next week. I'm not sure on which days we will be streaming, but I'm available for the whole week. So I think you can catch me on Monday. Thank you very much for watching. For any signals, you'll get notified in the A1 Trading Discord. I'm looking to buy NZD-USD. Good luck in the markets, and I will see you in the next video.
Thank you for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want to get put on the nice list this year? Then make sure you check out the A1 Stock Box. That's all for today, everyone. We'll see you tomorrow. Ho, 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 ho.